Uranium. With the recent drop in uranium, market sentiment has already declined significantly. If you have a look, for example, at Twitter Uranium, you'll see quite a few funny memes on the haircuts and beatdowns and whatnot. But if you look at the uranium price itself, you'll see that it's undergoing a healthy correction after quite a while of over 200 days of generally going higher without dipping at all under this 50-day moving average. As you know, we do like looking at cycles on this channel. And just like most other assets, uranium price also likes to follow these cycles that usually last around 5 months or so. The most recent has been quite stretched, and for more technical details on the outlook for uranium prices both in the short term and in the long term, have a look at this most recent video on our channel. Generally, it looks like a bit of a cup and handle formation is playing out. While you are at My Finance Teacher, you might also check out our website, myfinanceteacher.org, where we started publishing these uranium reports. There is a typo here, on the 8th of September 2021, and since then, uranium price, even after this most recent collapse, has risen by around 125%. So it was clear back in 2021 that the uranium price was extremely low and was about to explode higher. The question most recently, with this decline, both in price and in sentiment, is whether this peak of uranium prices poking above $100 is the end of the longer-term bull market. And the short answer is no. Let's jump into the details. In the previous uranium bull market back in the early 2000s, as well as a couple of decades before that, those bull markets in uranium were actually accompanied by very significant expansion in uranium supply. Those supply expansions were based on this megatons to megawatts program, converting some of the nuclear weapons to fuel for nuclear power stations. And in early 2000s, that previous bull market in uranium was accompanied by this significant growth and establishment of currently the largest uranium producer in the world, Kazatomprom, based in the Central Asian country of Kazakhstan. In the ongoing bull market in uranium, though, we don't have a fundamentally important factor that significantly expands supply. And yes, higher prices poking above $100, are going to increase capex, are going to increase mine production, but all of that is going to require time, years and years, before uranium production can expand significantly to counterbalance huge demand growth that has already started happening and is projected to continue over the next several years. Plus, while some relatively smaller uranium miners are trying to push their production higher with relatively high uranium prices more recently, a couple of largest producers, those are Kazatomprom and Cameco, have actually reported deteriorating production for 2023. And on top of that, due to some ongoing problems with supply chains, the guidelines for 2024 productions have also been decreased. Perhaps even 2025 might be affected in the future. We'll have to see about that. So the supply is still tight, even with greater production incentives due to higher prices. Potentially there are further risks that might tighten the supply even more, including, for example, ban on Russian uranium. That might shift uranium prices northwise quite a bit in the West, also affecting any Western uranium producer quite positively. Or perhaps any further escalation of the conflict in the Middle East, which we hope will not escalate, might again squeeze uranium supply, cutting off, for example, the supplies of Australian uranium to Europe. What do you know? Again, perhaps potentially affecting any Western uranium producer. If you combine any of these potential supply squeezing factors with the ongoing accelerating growth in demand for uranium, where a lot of power plants are getting life extensions and even whole countries and governments are proposing significant expansions to their fleets of nuclear power plants, you will realize that despite the ongoing correction down into a temporary cycle low, the longer-term fundamentals in uranium are still intact, and the longer-term bull market will see prices significantly higher. How high will you ask? How about $140 per pound as at the top of the previous bull market? Easy as a piece of cake, I would tell you. Can we go higher? Yes, very, very likely. And for more details, see the upcoming part 2 of this uranium report at myfinanceteacher.org. This has been part 1 of our nearly monthly uranium reports. Part 2 is going to be published exclusively for the members at myfinanceteacher.org in the next several days. Have a marvelous Monday. Bye bye.